Banks are preparing and building up stockpiles of cash reserves as they prepare for bad loans. Now, if this isn't a clear sign that you should prepare, then I don't know what is. JP Morgan Chase CEO Jamie Dimon is growing increasingly cautious, and recent earnings reports reveal Chase Bank has built up approximately $428 million in reserves as they prepare for bad loans, late payments, delinquency, and defaults as businesses continue to feel the pain of inflation, supply chain trouble, and labor shortages that are at their worst levels since the Biden administration has been in office. Chase Bank has also suspended share buybacks, so there's that. And remember, we talked about this happening already, or at least I did in my last previous videos. Go check them out. And here it comes. So you guys better be paying attention and preparing. Also, someone commented on my last video in response to many businesses seeing record profits. And they stated that these businesses aren't seeing record profits because they are heavily leveraged. So that is somewhat true, but not quite. So please allow me to explain. Now, businesses recording record profits is in relation to all their expenses that come before their revenues. So ultimately, your revenues minus your expenses equals your gross profit. Now, with that being said, most major businesses, with the exception of a few, most large companies operate out of debt. They operate based on lines of credit. They operate based on what is called long-term liabilities. Now, for the average consumer, your long-term liability is going to be narrowed down to pretty much a mortgage if you ever have one for owning a home. Besides that, every other loan that you have is pretty much a revolving credit account that is classified using general accounting or generally accepted accounting principles as a short-term liability. So, with that being said, we need to talk about your future. We need to talk about your finances. We need to talk about your money, and we need to talk about it in relation to how you can use the same strategies, techniques, and hacks that these businesses are using to your own advantage by leveraging credit, by leveraging credit scores, by leveraging long-term liabilities, allowing you the ability to do more with less, so to speak. But the point I'm trying to make is that despite businesses being leveraged, they still produce profits. Now, what can happen is they don't produce enough profits consistently to maintain the payments on their debts, and or maybe perhaps they have some form of balloon payment that is due relatively soon, and they don't have the capital to make that payment. That's when they can run into some financial trouble, and ultimately those long-term liabilities become short-term liabilities, and then those will subtract from their gross profits. So although a business may be extremely leveraged, this is how businesses operate, and this is how businesses continue and grow. And it is by, it's no different from real estate. If you have a long-term liability being a mortgage, the reason being is that mortgage isn't due entirely in 30 days. It isn't due entirely in 12 months. It's going to be due entirely, more than likely, in 30 years, maybe 15. Or if you receive some form of modification as a result of taking forbearance during the pandemic, it could be extended out to 40 years. So those classify as long-term liabilities. But the beauty of it is, while you're carrying this debt, you're also having or should be realizing an appreciation of the asset, being the property, ultimately gaining more in value than the interest is accruing, so that when you do sell it prior to the full maturity date of the loan, 15, 30, 40 years, when you do sell it, you realize the profits with only having probably put down the bare minimum of 3.5%, 5%, 10% maybe, 20% if you want to avoid a property mortgage insurance on your payment. But your return on investment is going to be far greater than if you were to try to shell out $2, $3, $4, $500,000 or more to own the asset outright, have zero long-term liability associated with it, and then sell it from there for a profit. Businesses do this all the time, and this is how most businesses maintain their ability for growth and success, by utilizing good terms, good credit, and low interest rates, as low as they can get, to help them grow their business. So I just wanted to clear that up. If you guys have any more questions about it, feel free to hit me up. You can contact me from the links in the description. Now we got to get back to the overall economy, not just you and I. But for real though, we need to talk about you and I. So if you want to get on the path of passive income by way of starting a side hustle now and starting your own small business, becoming an entrepreneur, becoming your own boss, let's have a talk. Now, just wait until the major banks like Chase, Bank of America, Wells Fargo, Citibank, and more banks start losing money big time. Of course, they'll continue to be propped up by our government, but in the meantime, the average American citizen is going to be the one who will feel the pain. Prices will continue to rise as the inflation freight train plows right through the station without stopping, and interest rates make using credit cards and borrowing money even more expensive than it already is right now. JP Morgan Chase, stocks ticker symbol JPM, if anyone's interested. Remember, you can buy stocks, you can buy shares of stocks, you can buy fractional shares by using Webull, M1 Finance, Robinhood, or any other brokerage app that you feel comfortable with. This is not financial advice. I'm just sharing with you guys some basic information that is readily available, which may even be popping up for an ad on this video, maybe, I'm not sure. But JP Morgan Chase is the largest U.S. bank by assets, and its earning reports are used by investors and analysts as a bellwether for how Wall Street fared over the past 3 turbulent months for markets and the economy. Shares of JP Morgan Chase's stock fell by about 3% in the pre-market trading last week and are down 29% overall this year. And JP Morgan already laid off hundreds of employees in their mortgage division as interest rates spike. And you can thank the Fed and Jerome Powell for that. They're trying to force the working middle class poor to a new level of being broke. As Senate Minority Leader Mitch McConnell says, Americans are basically lazy and won't go back to work until they run out of money, since they are flush with cash from the stimulus checks that went out over a year ago. Is that right? Let me know if you guys got a bunch of money sitting around from these old stimulus checks. Now, quick question. How does your checking and savings account look before payday? Is it laced? Because if not, Mitch McConnell, he's off in la la land. Now, Chase Bank CEO Jamie Dimon warned last month of an economic hurricane brewing and said that he was bracing himself for the impact of the Federal Reserve's tighter monetary policy and rising costs of food and fuel due to Russia's invasion of Ukraine. He said the Fed's effort could lead to a hard landing, and there's still a serious set of issues to contend with. Dimon also said rates are rising because of inflation, and in his opinion, or in his view, they'll go up more than people think. And that was what I was telling you guys about on my last video. Go check it out. I seriously believe that we're going to see mortgage interest rates climbing up, as Jerome Powell has already made reference to the next rate hike being at least 100 basis points, maybe more. I don't think we're going to see any sort of reprieve from inflation until mortgage rates are. I'm using mortgage rates as the constant here, and once they hit 15% or near 15% is when we're going to start seeing a change. Quantitative tightening will reduce liquidity in global markets, and stock prices are down a lot as well. So these are things that we all need to be mindful of and paying attention to, and more so importantly, finding ways to position yourself financially and your family financially to be prepared for SHTF that is coming down the pipeline. JP Morgan Chase, Jamie Dimon, Other well-known investors, Warren Buffett, Charlie Munger, even other YouTube channels that I watch regularly, including Graham Stephan, have all warned, and Michael Cowan have all warned of the effects of inflation, of conflict and turmoil overseas, and how it's going to affect the markets and your paychecks and how far your money goes and the future of the US dollar and how many preps you can buy with the dollar. Will you have a place to stay? Will you be able to afford the place you have to stay? There's a lot going on, a lot happening. And when you have big wigs and big CEOs and execs like JP Morgan Chase CEO Jamie Dimon coming out and making these claims, I'm paying attention, and I just hope that you guys are as well. And what we were talking about in previous videos about the possibility of in this case, their words, bad loans. These are defaults. These are small businesses and medium and large sized businesses not being able to pay their notes, not being able to pay their payments on their loans, not being able to pay them back. And the banks are preparing. $428 million has been set aside so far by one bank in particular, JP Morgan Chase, just to be prepared for bad loans. And as the economy continues to decline, inflation continues to rise, the labor market continues to struggle, middle class and working class continue to have to tighten down and buckle down and really be more budget conscious, we're going to see some businesses collapse and fall. And the loans that they carry are going to default, and we're going to see some bankruptcies, and the banks have to be prepared for this. So if you operate a business, or you work for someone who operates a business and they took out a loan for some equipment, or they took out a loan for some the fleet for the trucks, if they took out a loan for some advertising, they took out a loan for warehouse space or storage or office space or anything like that, and their revenues aren't where they need to be, their revenues are coming in lower, their expenses or overhead is coming in higher, their profit margins are being reduced, then they're going to start, or if they're receiving slow payment or no payment from their accounts receivable, then they're going to start falling behind, and they're going to fall into the category of bad loans and bankruptcies that these banks are positioning themselves for, to have the cash flow cushion, so that when these loans go bad, they've already accounted for them. Now, much like you and I, as we prepare, the banks are preparing. And fortunately, if these problems don't occur, then they're better off than otherwise. They're better off having that cash available for the potential of bad loans that they're anticipating, only to find out that all the loans are good and fine and great. Now they're up. Theoretically, they're up, as they've already kind of earmarked this $428 million pretty much is going to be written off down the drain, so to speak. So as you're preparing, the beauty of it is if by chance we don't need this prep, if we don't need this stockpile, if we don't need everything that we're working so hard to accumulate, you're just going to be better off after the fact, and you can breathe easily, have a sigh of relief at that moment. Maybe we can sit down and toast, and you'll say to yourself, at least I had it, I was prepared, but now I'm better off for it, and I can put this to great use in another way. But honestly, I'm expecting to see a lot of businesses tank. I'm expecting a lot of businesses to go under, a lot of businesses to fall behind on their payments, a lot of businesses to default on their loans, and unfortunately they're going to go bankrupt, and employees are going to lose their jobs, and other businesses are going to be affected by this, and our overall economy is going to be affected by this. And I want to throw it out there. If you are a small business owner, operator, president, CEO, entrepreneur, and you want to have these conversations, let's talk. Because I've been in the game for a while, and I pretty much know how it goes, but I also know some tricks of the trade, and I know a lot of people that we can have some conversations and help get you on the right track to avoid catastrophic failure, past the point of no return, and maintain your trajectory for the potential for success for your business, your company, your employees, your family, your income, your livelihood, your ability to prep and prepare, and put away, sock away some money in savings and invest, and be able to grow after, actually grow during this time, and grow tremendously after we get through whatever it is we're going through, which seems like is never ending. But at some point, the market will shift, the market will turn around, and that's the point at which you're going to want to put your foot down and be ready to go and jump on opportunities and capitalize on investments that you are in the position to be able to participate in, to reap the benefits of. So we can have that conversation. Comment below, but honestly, the best and easiest way to contact me is going to be through the links in the description, so check them out. And I will also be posting some more business and finance, personal finance, small business finance, not financial advice, but just some more business related, income economy related videos that I will provide links to those who are part of the community and part of the family. So keep an eye out for those. But as always, you guys take care, be safe, and I'll see you real soon. Take care. Bye.